Hello everyone, this is Stock Market Daily. Thank you for joining me today. It is February 27, 2023. As always, this is not financial advice. Please don't copy my trading strategies because you will lose money. This is only for educational purposes. Okay, so as you can see today, we had a nice little gap up in the morning, a sell off to this support level here, and we took right off from there. Again, these red lines on the chart represent previous support resistance levels that I just happened to mark, and sometimes they fit really perfectly, as you can see here. So we started running up over here, and then at some point we had some data that came through along with some Fed speakers. We had the pending home sales data, which was actually pretty high. Manufacturing data was pretty good, and then the Fed speakers were kind of hawkish. So I'm assuming that's what led to this kind of a fast decline and then overall decline during the day. In fact, you could probably say that we closed the gap right about here between Friday's highs and today's low. We ended up closing the gap, which has been happening quite often recently. And we kind of bounced off right pretty much right out where we would have closed the gap. So a little bounce off at the end of the day trading. Let's take a look at the trades. Today is obviously Monday, so I do my usual sells of covered calls. And today we had Beyond, Roblox, PayPal, and Tesla. And the rest were the SPX trades. So let's take a look at the SPX. You can see nothing here on the put side, but there's three positions that are still expired worthless, and they're still there. So you can see that I entered the 40-30, 40-40, and 40-45 level cautiously, and you will see that I entered the 39.80, 39.70, and 39.90 aggressively on the put side. The reason for that is because I was assuming that we're, where we'd start, and we had this kind of a nice little uptrend over here. That's where we were going to end on the day. This kind of confirmed my idea here, but unfortunately, we gave up here and obviously sold off. So what ended up happening on these particular puts, the 39.70 was bought back for $5. You could see that here, which was just in case we started selling off even more rapidly. At 39.80, I waited until it was $70, which was also pretty much right at the money. I mean, it was when I was purchasing it back, it was right around here somewhere. And the last one, the 39.90, I had to roll, and you could see that it was here. I only got a $20 credit for that, but I was able to roll the 39.90 to the 39.70 for tomorrow. So we'll see how the market plays out tomorrow. Hopefully, we're not going to have too much of a down day. I don't want this put to be trapped even further. The idea here is to roll it down as much as possible. I was not even concerned about collecting credit because I always want to end the day in cash, or at least have the next day to be able to end the day in cash. So I don't want this put to be even anywhere near the money, to be honest. So let's talk about these trades really quick right here. So you see I have 4,500 calls on the SPX that I purchased, and these are right here. You can't even see them because they're really far of the money. And the reason why I purchased those calls is because I need to, let me get the option chain back up. I need to have the calls to be able to sell these calls right here. So what I do is I look at the farthest out date that I can get for about $10 per contract, either $5 or $10. I don't want to spend anything more than $10 because we know for 100% fact that it's going to expire worthless. Let's take a look at those. We know for 100% fact that it, where'd they go? Oh, it's not even, let's do all. We know for 100% fact that they're going to expire worthless. They actually say they're 15, but I'm sure tomorrow during trading they're going to open up at 10. So they're going to expire worthless anyway, and the least amount of times I have to purchase these, the better. So I look through, days like the 16th, the 17th, the 20th, and I see that these contracts are starting to go up in price. But the days like the 14th, the 13th, they were all about $10. So why not go out as far as you can and buy them for $10 at a later date? It just makes sense. So once I purchased these, I was able to sell these on the 27th, which is today. 1, 2, 3 here. So that's the strategy. And the same thing on the put side, as you could see, the puts are going to be right here. I have 2,800, and these are now worth like $5 each. And I probably paid like $10 for these as well. And because I purchased 3 of these, I was able to sell, one second, I was able to sell the 1, 2, and 3 that we talked about here. So that's the strategy. Tomorrow, like I said, we have one option that is already on the books. We have it right here, the 39.70, and right now it looks like it's worth 760. I'm assuming that the futures are up a little bit because it was worth a little higher, but we'll see what happens tomorrow. And for the day, the total, once I add everything up here, subtract the debits, made $2,468. So not a bad day, but that does take into account the other credits for regular stocks, not just the SPX like I do usually. And I did take an aggressive approach here at the 810 credit for this 39.90 because I assumed we were going to come back to the 4,000 level. So as always, I do these videos every single day showing you my strategy, what I did. And if you like the content, please make sure to hit the like button and subscribe. Thanks. We'll see you tomorrow.